Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. He's speaking to us from South Florida. Have you been hitting the beaches for spring break?
First, thanks for inviting me on, Jim. It's been, Florida's been delightful. You know, there was, the beach has been open all along, except when all the college hordes descend on them for spring break. They close beaches and they tend to move, they migrate north to where I live around Del Rey. But the beaches are great, and you get, when you're down there, you get the impression no one really is thinking about the pandemic. It's not like social distancing and masking have any, they have no importance on the beach at all.
Rick, what do you see happening with inflation versus deflation? I know we did a webinar a couple of weeks ago that was well attended about your point of view, but can you maybe point that out again and why you believe that point of view is the correct one?
Well, I got the regular newsletter Musings from Charles Hugh Smith this Saturday. He's one of my favorite bloggers. And I know that we're on the same side of the inflation-deflation argument, but he put it out there in his last issue in a way that's familiar to me. The idea is, well, if you're wondering whether inflation or deflation is going to be the main feature of the end game, you really have to look at what the interests are of the big money, the big lenders, and the big players. And by and large, none of them want a hyperinflation. You know, that basically means that everything that's owed them will be paid off in much less valuable money. So Charles does a nice analysis of this, and it dovetails with what I've been saying as an example, and that is, you should not look at inflation or deflation as the monetarists do, mainly as an increase or decrease in the money supply, because we're no longer capable of measuring money. There's so many fungible forms of it. But you should see inflation or deflation as deflation is an increase in the real burden of debt. So if what you owe is harder to pay back, trust me, we're in a deflation. And I think that's what's coming, and it just seems the opposite. Like if we had a hyperinflation, then let's say you've got a few $100,000 bills in your wallet, and you think, well, hell, I think I'll just drop in on a bank today and pay the rest of my mortgage off. And you hand your mortgage lender a few $100,000 bills and say, well, I guess that squares us. That day will never, ever happen. You know, the lenders are never going to settle for hyperinflated currency for all that money that they loaned you to buy the house that you could never afford in the first place. And for that reason, I think we're going to have a deflationary end game. And it's very counterintuitive now because the Fed and all the other central banks of the world are inflating like crazy. You know, their fiscal programs now with Biden's $2.2 trillion infrastructure monstrosity. And, you know, the handouts we get once a year, the stimulus checks and things like that. And they are putting additional trillions on the balance sheet of the Federal Reserve. It's money from trees. The government basically borrows money from itself to send to us. And that feels like the track to hyperinflation. But the point I keep making is that the 2 or 5 or 10 or 15 or 20 trillion dollars that all these stimulus packages may put out there is really just a drop in the bucket compared to the the deflationary juggernaut that's waiting to implode. And by that I mean all kinds of things, debt instruments such as we find in the $2 quadrillion derivatives market that are denominated in dollars. So when those markets collapse, which they will, a lot of zeros will be wiped from the books, and it will happen on such a huge scale and so quickly that any thoughts about the Fed trying to monetize our way out of that problem it's ridiculous. It's going to be a calamitous event, and there's really not going to be any time to, in some orderly way, reinflate the markets. So that's the way I see it. And Charles's essay starts out with that quote from Mike Tyson that's becoming more and more popular, which is, you got to have a plan. Everybody's got a plan. They've got a plan until they get punched in the face. So Charles is saying that we're all going to get punched in the face by what's coming. And there's no real disagreement between the inflationists and the deflationists. We've accumulated so much debt, it's unpayable. It's going to have to be wiped out in some calamitous way. So there we're agreed. But we all have to be ready for that punch, and we have to have a plan, even if we can't know exactly the way things are going to unfold, because even those big money interests are not going to be completely in control. Things are going to happen so rapidly.
Is gold a hedge against the hedge fund collapse?
I love gold. I'm not obsessed with it and thinking it's going to $50,000 or even $5,000 an ounce, but I'm pretty sure that it's going to hold its purchasing power in relation to virtually all other classes of investable assets. So, what I'm suggesting is a kind of barbell strategy where if one doesn't produce, the other will. So the barbell is gold versus treasuries. And I think that in any scenario, one or the other, or perhaps both, will do quite well. And it doesn't hurt that both are very much out of favor. Gold is being not quite shunned, but it's being put aside really with the speculative action that has gone into Bitcoin. So I like gold because nobody likes it, or its popularity is limited just to gold bugs. And I like bonds because everybody hates them.
We'll have more with Rick Ackerman right after this.
Ackerman Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Ackerman's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at ackermanresources.com.
Welcome back. We're speaking with Rick Ackerman. Rick, gold has rallied over the last couple of days. Do you think people are seeing your point of view about maybe gold is a good thing to hold, or is it perhaps because the price has gone down $300 from its peak, more or less?
Well, I see gold and silver as marking time in a bull market. And it's partly because they're just sort of waiting for the mania in Bitcoin to play out and for people to return to their senses with the idea that gold and silver are a much better hedge against the unknowable than Bitcoin. So for the moment, though, the obsession with Bitcoin is siphoning off the interest in gold and silver. So I distrust the rallies in gold, it's not quite stalled. Gold has certainly come down from the highs, but it is just sort of biding its time in a bull market. So as for the rally in gold over the last week or so, I'm not really that enthusiastic about it, although if it meets certain benchmarks, technical benchmarks, I'll be more inclined to get on board. But right now I have lower targets in gold.
Gold miners, people bailed on their stocks. Are their stocks a great bargain right now?
Well, they are in theory. You know, if you talk to any of the mining company executives, I used to take trips out to the mines with Al Corlin and a bunch of guys, and you know, contrary to the old saying attributed to Mark Twain that a gold mine is a hole in the ground with a liar standing at the edge of it, the executives of these companies, a lot of them have mining engineering degrees, and they really know what's in the ground. There's huge resources, and if you're buying a company that's resource rich and efficient about getting it out of the ground, I think you can never go far wrong. But you can imagine, though, that in order for a lot of these penny stocks and things, there's so many great gold producers out there and exploration companies, it's really hard to sort them out. You need kind of a manic bull market to power them higher, a market where nobody really much cares about value. And when that attitude finally takes root, the mining shares will have their day.
We'll have more with Rick Ackerman right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Rick Ackerman. Rick, a survey of people who are working at home right now found a third of them said they would rather quit their jobs than return to working in the office full time. What are the economic ramifications of that?
Well, if you look at New York City, the ramifications are that all street level amenities are dead. You know, the hot dog vendors, the restaurants, cities they're going to come back to an extent, but so many businesses have deserted the office towers that they're always going to be at less than capacity, and that has implications for the bondholders who finance the construction of those businesses. So if people aren't going to come back to the office in the old numbers, then everything that's happening at the level of the street on up and in the subway systems is going to be, let's call it deflationary. You know, we have a lot of write-offs that are going to have to occur in facilities that will never achieve capacity as they did in the past. So that's a big problem.
We have governments on both sides of the border, Canada and the U.S., saying they're going to spend billions. In the U.S.'s case, $2 trillion if Biden's bill ever gets passed, and build infrastructure. It's okay if you're repairing current stuff, but like you said, perhaps rapid transit will not really need that upgrade if people aren't using it.
Well, that's a joke. You know, you really don't think that clowns like the ones giving Biden advice are even focused on what the future might be. You know, like, for instance, if air travel never returns to its previous level of capacity, then, you know, what do we need airport and even road infrastructure for, especially if people aren't going to be commuting to the office every day in the same numbers that they used to? So it seems dubious that whatever they've got in mind for infrastructure is actually is being planned with the kind of vision it takes to even imagine the future. But fortunately, the good news is that bad news is that only about 5% of all that $2 trillion is going toward actual roads and bridges and things. You know, the rest of it will be for social engineering, for partisan projects, and just to give you some of the flavor, there's someone down in New Orleans that says that they want the Claiborne Expressway torn down because it's basically a racist highway that separates poor black neighborhoods from rich white neighborhoods. So if that's the kind of infrastructure they're talking about, it's all the 2.2 trillion will be misdirected, but fortunately, I don't think that the bill has much of a chance of getting through intact. We've got quite enough stimulus, really, and even though it seems like a big number compared to the 2 trillion they sent out to everybody in checks that got spent on who knows what, you wonder, how significant a sum $2 trillion is. It doesn't seem like it'll go very far.
A study done by the Toronto Dominion Bank and TD Banks, big in the U.S. as well, found that if Canada goes to a low carbon economy, it will cost Canada 450,000 jobs. And usually when it comes to something, when it comes to social engineering or whatever, the U.S. has 10 times the population of the U.S. So if, and what happens in the U.S., we just divide it by 10 in Canada, or if it happens in Canada, you multiply it by 10 for the U.S. That would mean if, Biden goes to a low carbon economy, that's going to cost 4.5 million U.S. jobs.
Yeah, I don't doubt it. I remember going to a presentation by one of the big, financial firms, in Boulder, and the guy had the energy pie there about how much of the energy we consume is from fossil carbon sources and how much of it is solar and wind and this and that. And whatever the predictions were 20 years ago, the pie doesn't change much. It's very, very hard to take a huge economy that's more or less dependent on natural gas, oil, and coal and just sort of shift it all of a sudden into wind. And you read more and more on point criticism of like wind generation for one, because someone has taken the time to explain that when you take the wind tower down after it becomes obsolete, you've got this problem of disposing of the fiberglass, the propeller and things like that. It takes enormous energy to build a wind tower that you never really recover over the lifespan of the tower itself. So here we are sort of headlong into the, whatever it is, the Al Gore, Joe Biden AOC plan. But, it's all based on, very poor economics. So, if they ever got smart about it, they would go in the obvious direction and develop nuclear power. But, I don't see that happening either, at least not to a significant extent.
Rick, what's going to happen to all these empty office towers? Are they going to have alternative plans, perhaps make the tower part residential, part business? Could you move vertical farming into these buildings, or do you just rip them down and turn downtown cities into park space?
I'm thinking the last really big city I lived in was San Francisco, and I have a friend in commercial real estate there who said that the desertion of the city by businesses that are in these office towers is absolutely alarming. And, he said he couldn't have imagined such an exodus. So yeah, there's going to be a lot of empty space. And I don't know that you can tear those buildings down, but converting, a big of 30, 40 story office building into residential use, that takes an enormous investment that could never be recouped. It's not like people are dying to move back into the cities to begin with, and the alternative, transforming the office towers into structures for the quote-unquote homeless, well, you can imagine the problems you have when you try to bring the tent cities into the office high-rises. So I don't think we've got a good plan. I wouldn't expect the conversion of those buildings to, it's not going to be, I'd say it's not going to be easy, but I don't think it's going to be possible. You can do it with ground level amenities, shopping malls that are essentially 1 story or 2 stories, and that's already happening across the country. A lot of shopping malls are being repurposed, and a lot of teardowns involved too, but they're being repurposed for, multi-use mix of residential, ground floor commercial, and some office on the upper floors. But we've we've demonstrated that we don't really need all that office space. So even the concept of transforming defunct shopping centers into something else has its limits.
Rick, thank you so much for chatting with us.
Always a pleasure, Jim. I appreciate your inviting me on.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. He was speaking to us from South Florida. If you have any questions for Rick or any of our other guests, you can send them to info@howstreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.